Hello and welcome to the Private Practice Owners community, where I am excited to really show you and begin the steps of how to invest. This is the first series in course 3 where we are digging into investing. So we're learning how to invest, why we're investing, and based on that why, where things should go and whatnot. I'm a CFP, so I work with people on this all the time. This is not personalized advice. And when we get into investing, it becomes very personal. So you got to realize that this is for educational purposes only, and you need to make changes based on your individual circumstances. But within this course, I will give you the tools and tactics and design that I use to guide people when they first begin investing. So therefore, you can take your assets and start taking steps to investing for the long term as well. And I can't wait to get started. So let's go. First, before we start, join that newsletter, thinkingcapfinancial.com/newsletter, where more tips, advice, that sort of thing. YouTube, you can find more videos that I do, including this course there, as well as the school community, private practice owners. LinkedIn, I'm always there, so feel free to follow me and connect with me there. And then, of course, share this course if you found anything useful in it. Share the community, share the course so we can continue to grow this thing together. Now, what are we going to talk about? This is really an introductory to the investing series of courses, but what I want to do today is first kind of demystify a little bit when it comes to investing, because we have a lot of stress, a lot of fear, a lot of concerns when it comes to investing, because it seems complicated. And it is complicated. There's some complicating scenarios and things you have to think about as you're beginning to build a process for investing, but it's not the most overwhelming thing in the world. And so through these series of courses, I want to make sure we're demystifying the idea of investing for the long term, but also kind of reducing what investing is to make it a little more easier, a little more navigatable. We'll go with navigational, and a little more easy to navigate. That's what I was going for. So you can begin that process of investing for yourself. And, sometimes these terms can be very difficult to understand or keep in mind. And so the goal of this first video is to take what could be a very, very difficult topic and kind of reduce it down a little bit. And then the courses that follow are going to go into various parts of the investing world and sort of how to think about things, but we can use kind of the framework that we've developed here. So that's what I'm hoping to achieve. And through the rest of the courses, what we're going to do is first begin to understand your objectives when investing, because we can't know what to do unless we understand where you want to go and how you want to get there. We then talk about the different investment options that you have available to you. So the tools you're using, the tactics, that sort of thing. The third or fourth video, I guess, would be the asset allocation and what even that means, because you may not even know what that means at this point, and that's okay. But essentially, we're going to talk a little bit about sort of how much risk you are taking on and why you're taking on that risk and how you know how much risk you are taking on. In the video following that, we're going to talk a little bit about risk management, because when investing, we're not just always worried about the upside. We also want to protect from the downside. And there are things that we can do to do that depending on where we're investing, how we're investing. Diversification plays a role in that. And so we'll really dig into that. What would that be? The sixth video would be tax efficiency. So we're actually digging into the taxes. It's not something what people think about when they first start investing is the tax efficiency, but it's actually one of the most important things to think about, because when you eventually get that money out, you need to know how you're getting it out and what the impact to you is, because that's going to have a real say in terms of how much you're actually walking away from your investing efforts. And when you're talking about, 30, 40 years down the line, that could be a big deal. And then finally, the last video, we'll really dig into some common mistakes that people make that I often see that are just common through the zeitgeist. And so you can avoid doing that when you're first starting out. Or if you already made some of those mistakes, maybe you'll feel like, oh, well, I'm not the only one who did that. You now know that, and you can move forward with the tips and strategies that I'm going to share through these series of videos. So I hope you find it useful. And let's kind of first get into like demystifying the idea of investing. And really what I like to talk about when investing is that there's three main choices that we have to choose from. And if we understand that there's really only three choices, it makes it a lot less complicated to begin that process. And the way I liken these choices is to the head. And so when you are talking about the skull, the part of the body that protects the brain, then what we are talking about when it comes to investing is the tools that we are investing in. Essentially, the tools are what covers our investments and protects it from taxes or other sort of um, ability to even like access them. And so the big question when it comes to the skull are the tools that you're investing in and the taxes that you will end up paying based on the tools that you are investing in. And so the tools, by tools, I mean like the solo 401k, the IRA, the SEP IRA, the Roth. These are all different types of tools and all have different tax rules behind them. And they're essentially the skull of your investment decision. The second question that you need to answer is what type of product you're going to invest in. And these have various different products out there between, mutual fund, index fund, even annuities, life insurance can be invested in some way and therefore would be a product in some way. But what I'm really trying to talk about is essentially the mutual fund that you're buying. Because when you are investing, you're typically not just buying a bunch of different stocks because the least it's the least efficient way to really invest. Instead, we're often buying like mutual funds. But what happens when we buy mutual funds, if we go wrong in that process, they might have a high fee. And that fee can really build up over time. I think I posted this on the school community, but something like a 1.5% mutual fund fee compared to a 0.03% mutual fund fee. If you were investing $30,000 over the course of 40 years, you would have spent $95,000 in mutual fund fees for that 1.5% mutual fund fee compared to, I think it was like 23,000 for the 0.03% fund fee. And luckily, the way the investing world has moved, fees have really come down. And so you really want to be careful about the product selection. And we'll be sure to go more into this. This is not the only time I'm going to be talking about this, but it's a key part of the process. And that's really the brain because it's holding the assets that are you're essentially investing in when you pick a mutual fund. And then the third is essentially the assets or the makeup of the mutual fund. And I liken these to the neurons. So we have the skull, which is the tool. We have the brain, which is the fund that's holding the assets, and then we have the actual assets, which are the neurons or synapses or however you want to sort of think about that. And this is really how the movement or how much like growth you're going to see, and essentially it captures the risk or the risk you are taking on is determined by the assets that you have. And with those three questions in mind, how you're taxed, how much fees you will pay, and then how much risk you're taking, by the time you gather that information for those three things, you can have a very good determination of where you will be when you need the money to invest. We cannot predict where the market will go tomorrow, 10 days from now, a year from now, even 10 years from now. But what we know with some certainty is that over the course of time, as long as the economy of the US and the world is growing, then we can grow with it at a certain rate. And typically we see, depending on the area, between, 5 and 9% or something like that, let's say. And these three decisions can help you get access to that growth rate. And that's really what I want to leave you with today, because I want you to understand that essentially with those three decisions, we can make up a portfolio for ourselves in how we invest and how we save. Because if we know what we're going to do at the skull level or the tax level, we know what tool we're investing in. If we know what we're going to do at the brain level or the product level, then we know what type of products we're going to have and what fees we face, whether it's a mutual fund, an index fund, or even individual stocks and bonds could fall under that category. And then if we know what we're doing at the asset level, we know how much risk we're taking on, and that's going to determine how much different type of assets we're invested in and the risk level that we can expect moving forward. But this is a very early part of the series. This is only the introductory video. This is week 1. So essentially what I want you to walk away with is that simple design. And then in the corresponding videos, we'll dig much deeper into this process so you yourself can actually go out and pick the right tool or the right product or the right asset mix for you. And that's really what I want you to achieve by the end of the series of videos. So let me know if you have any questions in the meantime. Make sure to, again, to follow that newsletter and check out the week 2 once it's published, where we're going to determine your investment objectives. I'll talk to you soon. Let's go.